Good day, guys. It's Jan Kutsia returning for part 3 of the review of Trader Tom's school run strategy, which we've reviewed already in part 1 and part 2. Let's quickly look at what we've changed. As you can certainly see, there's already been an improvement in the win rate up to 43% now from the previous 38% where we ended in part 2. How did we do that? Well, we switched to trading on the 30-minute chart rather than the 15-minute chart. It's still taking the same breakout, but it's basically now looking at the first 30-minute candle, and then the moment you break its high or low, it will execute the trade. The spread has been widened from 2 DAX points to 8 DAX points to reduce the risk of being faked out. And I've also introduced a trading stop and take profit target of 500 DAX points. The trading stop is running at 180 DAX points, and it's not stepping, so it's actually moving 1 point at a time. And other than that, the closing the trades at the end of the day has been adjusted to now be 3 p.m. UK time rather than 8 p.m. UK time, which was an hour before the US session closed. So I think that's basically it. That's the changes, and I like the fact that with the 30-minute chart, I now have access to more history to test the strategy over, and it's executed 422 trades as opposed to the 202 trades in the 15-minute strategy. And it just gives us a bigger sample size, so it's good to get that same consistent cover. But you can see that the strategy has really been ranging over the last since the April 22. Now, I think before we were looking at it from here up, but here you can see that there was actually a period of really good performance before the Fed started with their shenanigans, and now it's just ranging a little bit. Okay, what's the left chart about? Okay, so, or the left statistics, and it's actually this the stop chart here, and this right-hand side is the middle one here. The middle one is where I traded one lot at €5 a point, and I kept it static, and then I introduced code which made the risk variable, so it would assess the amount of equity that's built up and look at the stop loss and then apply a 2% risk to determine what the lot size should be. And as you can see, by times it's gone up to 5. And then if it loses, it would reduce the loss size because obviously the equity reduced. So it's a bit variable, but it seems like you didn't get really a lot more money out of it, only an additional €4,000. So I'm not thinking it's worth it at this stage, but might still be worth it once we are able to improve the win rate up to, say, 60%. So for now, just something to be aware of, that it is possible to trade this on variable risk. And yeah, so for that, for the comparison between these two, then you can't really compare the €49 win per trade with the 34 because it's just based on different risk that was taken. What is comparable is the win rate because it's the same entry, the same exit, and so on. I do note that there's a difference in the number of trades that were taken, and I think there were trades that were not allowed due to maximum risk being exceeding what you would have had to in your account to be able to take the trade. So I would have to reduce the risk size maybe to say 5 lots to get rid of that problem. Okay, so that is it, and I hope you are eager to see part 4, where we will be reviewing removing days of the week if they are reducing the profitability of the strategy, and also the economic news events filter that I'm planning to introduce. Thank you for watching, and see you next time.